Good day, everybody. Welcome wherever you happen to be tuning into, and welcome to your VectorVest International online forum for this Saturday, November 4th, 2023. My name is Rick Franklin, Canadian consultant for VectorVest, and it's my pleasure to be with you today. Let me just check the chat and see whether everybody can hear me okay. I know the chat has been active already. I've seen Terry from Sarnia, Stuart, Tim. We've got Sentok from Cambridge. Hey, Tom. Tom from Burlington, I believe. Got Jerome from Naples. Richard from Maryland. Raphael from Calgary. I did see a comment in there too from Stuart about possible inverse head and shoulders on the Canadian and US markets. So it looks like we've got a lot of people. Yeah, good morning, Gary and Wojtek. So we've got a lot of material to cover. So welcome everybody. Hopefully everything's looking good where you are. We've got a sunny day here. I'm coming to you from the Ottawa area in Canada. So with all of that said, let's start advancing through the slides and get into the content for today. All right, here's our risk disclaimer. As everybody knows, there is risk in investing. Everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so with that one covered, let's go the right way instead of the wrong way here. Here's our agenda for today. So we're covering the first one right now. We will do a global market forecast. I'll be covering that, and I'll also be covering cherry picking sectors and industries. I think we've got some good content there. Hopefully everybody will enjoy and find interesting and useful. And today I am joined by, I think everybody has seen in the chat already, Mr. Jim Penna, Manager of Retirement Services, and he is going to do the keynote presentation of how to outperform fixed income investments. And there we have him. So good to see Jim today. We were together for a Q&A a while ago, not shortly after I first started doing the Q&As. So it's good to be back together with Jim here. All right, and I'm just taking a look through. Yeah, we have Jack in Houston. We've got a 10 in Israel, Dan in Naples, Florida. So we've got people from all over. There's somebody from East Tennessee. That's Bill. Excellent. Excellent. So let's continue making our way through here. We'll do the global market review next. So as everybody knows, we're going to see a lot of common things across all of the VectorVest countries here. We did have all of the central banks hold interest rates in the last couple weeks. They've all come through Bank of Canada, Bank of England, the EU, Australia, and of course the US just this past week. So we were in downtrend. All of our markets have about a 4-day uptrend going. So we're going to see some very common things when we go through here. So let's start first with Canada, and we'll start with Canada's color guard. As you can see, year to date, Canada is up 4.04%. Maybe we'll go through the numbers here on the side first. All right, so you can see, and maybe everybody can let me know in the chat, October. Did October live up to its reputation of being one of the toughest months in the stock market? I know we had a down month in September as well, but October, give me a one in the chat for everybody who thinks that October presented a lot of challenges to us when it came to trying to invest in the market. And I will have something more to say about that one in a little bit. Yeah, so we're seeing a lot of yeses and a lot of ones. Very challenging. You can see, however, with that negative action in October, it didn't knock our year-to-date returns into negative territory. All right, so here you have Canada with a 4.04% gain. We were second behind the EU, so the EU had a 4.31% gain. They led the way. Australia was lagging behind, unfortunately, at 2.12%. All right, so in Canada, the color guard is neutral. VectorVest advocates caution when buying stocks at this time. I'll say, to save a bit of time, as you can see, exact same color guard on the US side when it comes to the gauge and the guidance. All right, and if we look in Canada here, and we'll see the same thing here with Canada and the US, what's lacking, and actually in most of our countries, there's one country that's going to be the outlier here, but in our extended version of the color guard, there are no green lights at all. All we have is red and yellow. You can see how in Canada we did, our BSR was below the 0.20 and below level. We got to 0.10 this time around. Our MTI did make it to the 0.60 bottoming level. All right, but as you can see, once we came out of red and transitioned into yellow, the indicators were slow at first, but they are building up. And on Friday, from Thursday to Friday, you can see we got very good moves out of our RT. BSR went from 0.15 to 0.20. Still showing oversold, but the MTI from 0.74 to 0.83. All right, we're 3 days into a primary wave on the Canadian side in an up-down situation. And our confirmed call is down. Here you can see below, we've been in a confirmed down since the 16th of August. Our DEW just went to green, just went up on Friday, yesterday. Our green light buyer has been neutral since the 18th of October, and our primary wave turned up on the 1st of November. Now, it was pointed out in the daily color guard report, typically we're going to see green lights before we see the DEW, but as our markets were increasing, we had taken the hit, we had trended down. Our market started reversing fairly quickly, and so red lights here stopped us from getting green lights, and that was true both in Canada and the US and some of the other countries. All right, so we do have what's looking like a reversal and uptrend. It does look like it's gaining some momentum. However, we still need to remain cautious, and you can see that in the guidance up above. All right, so on the US side, pretty much the same story. As I mentioned, color guard reads the same. You can see the BSR on the US side fell even further than the Canadian market, got down to 0.08 back on the 27th, and the MTI got down to 0.50. So that's something we always have to be cognizant of on the Canadian side and the other VectorVest countries. Whatever's happening in the US side will typically affect our markets as well. All right, but you can see the slow moves on the BSR, the MTI, and the RT out of the gate. However, as of the last 2 days, we've started to pick up some momentum here, going from 0.81, 0.86, 0.92 on the RT, and 0.12, 0.21, and all the way to 0.37 on the BSR. And then looking at the MTI from 0.56 to 0.77. If we go over the calls quickly here on the US side, you can see they've been in a confirmed down since the 9th of August. Their DW turned up the same day as Canada on Friday, the 3rd of November. Green light buyers have been in neutral since the 17th of October, and the primary wave turned up again on the same day, the 1st of November. All right, so that's Canada and the US. And let's take a look at the other countries. So here we have Australia first. Australia's color guard, exactly the same as what I've just covered for Canada and the US. All right, and here we can see kind of the same picture, right? We have no green lights. So no green lights, now you can see the outlier. No green lights in Australia and the UK. The EU is the only one that's got a green light in the last couple weeks, and that was just on Friday in their RT column. All right, so same picture here. BSR got down to bottoming levels. Their MTI didn't quite get there. However, they are starting to, they have turned. We have bounced. However, you don't see their BSR gaining quite as quickly as in Canada and the US. And Australia is much like Canada, a very sector-driven market. All right, but they are getting some pretty good lift in RT and pretty good lift in MTI. All right, going from 0.90 to 0.94 in the last few days and 0.67 to 0.76 in the last 3 days as well. Up-down situation there. And here we'll go over their call. So confirmed down since the 13th of September in Australia. DEW, so Canada and the US are the only ones that got DEW up, and both on Friday. So DEW has been down since the 18th of September. Green light buyers have been in neutral since the 18th of October. They did get a primary wave up on the 2nd of November. All right, moving to the EU. They're the only one with a different gauge and guidance, so they actually have their gauge one tick into the green, as we saw here. And their guidance reads the color guard is mildly bullish. VectorVest advocates caution when buying stocks at this time. All right, you can see the same picture here. We did get down to, it looks like they got down to a low of 0.10 in the last, 0.11 in the last couple weeks, and have been rising right from the 27th on through. So from in the last few days, the RT has gone from 0.9394 all the way to above 1.01. And you can see their BSR is really starting to pick up momentum, along with the MTI here as well. All right, taking a quick run through their proprietary market timing signals. You got the confirmed calls down since the 11th of August, the DEW down since the 9th of August. Green light buyers have been in neutral since the 13th of October, and their primary wave went up on the 1st of November. All right, looking at the UK last here, and I did mention earlier, so Australia had a 2.2 or 2.12% year-to-date gain. The EU 4.31% year-to-date gain. They were the leader out of the 5 nations. UK has a 3.74% year-to-date gain. Same color guard as everybody else except the EU. So neutral and caution when buying stocks at this time. And in the UK, you can also see their BSR got down to bottoming levels as well, a low of 0.14 here. And same picture, they have climbed nicely over the last 3 days. RT all the way up to 0.98. BSR is now at 0.49. and their MTI has gone from 0.73 3 days ago to 0.88. All right, their confirmed calls have been down since the 2nd of October. DEW has been down since the 27th of September, and the green light buyer has been neutral since the 3rd of October. Primary wave in the UK also turned up on the 1st of November. All right, the next thing we'll look at here is the performance of our global markets tracking ETFs that you can find in the US software. Year to date, so here's our year to date. You can see from December to close yesterday. And here you have all of the leaders, the NASDAQ, the Qs leading the way, 38.09%. I think Bob Turnbull would be happy with that. And you can see here, so Poland, Greece, Mexico, and Italy rounding out the top 5 with fairly decent gains. If we take a look at October's performance, you can see we had only 3 winners, 40 losers, another sign of how bad the month of October was. Pretty much across the board, but we did have these 3, Poland, Greece, and Malaysia, able to eke out some gains. Poland, a decent 16.01%, Greece at 1.29%, and Malaysia at 0.19%. And here's a monthly comparison of those same global market tracking ETFs. And you can see we've had quite a change when we looked at these in September. Turkey and the Philippines, Turkey, Philippines, India, Brazil, and the UK rounded out the top 5. You could see September wasn't a great month either. Looks the same as October, where we only had 3 winners, 40 losers. And the gains weren't big, but we did have 3 that were able to achieve gains in September. Now you can see there's nobody from the top 5 in the top 5 anymore in October. Rounding out the top 5, we have Poland, Greece, Malaysia, South Africa, and the Dow actually ended up in the top 5. Out of those, only 3 were able to come through with gains. All right, the next thing we'll look at here is the performance of the market sector ETFs. So this is also available in the watch list, cherry picking folder on the US side. All right, so the 2023 year to date wasn't, I don't believe, I think the top 5 were the same as September, if I remember right. So you have semis, there were a couple that changed positions. But we've got semis, commercial services, we got S&P 500 tech, US home builders, and then S&P 500 consumer discretionary, rounding out the top 5, and fairly decent gains, as you can see across the board here year to date. If we look at the 10-day delta, so which ones have done the best over the last 10 days, you can see a repeat of some of them in here. Both of the home builder ETFs are in there. There's actually a regional bank that's climbed up in here in the last 10 days. US real estate, and a spotter on utilities. All right, so that rounds out that portion. Next thing we'll cover is the essays from around the VectorVest world. All right, so we have them all here in summary form for everybody. If you haven't had a chance, I know it's Saturday morning for some, later in the day for others that are tuning in here. But if we take a look out of the US, and again, I will say I've been through all of the essays here, another week of great essays, great information. I hope everybody can get out and read as many as these as possible and garner as much information as they can. So out of the US, we have another great essay from Angela Akers entitled Heed the Color Guard. All right, I've got the description over on the side. She talks about the differences between the market climate and market timing in the VectorVest world, and talks about heeding the color guard. Very timely again. Out of Canada, I will show this one up on the screen right after this for reasons that are here, but out of Canada, we've got Stan Heller with another great essay. He's been tracking the Ticker Tester Portfolio Challenge that's been running in the month of October, just finalized on October 31st. So he's announcing the winners of that competition there. Out of the UK, we've got another great essay from the late, great Dr. David Paul, How to Eliminate the 4 Major Trading Mistakes. Another great one to go in and read. Out of the EU, we've got Susan Hayes Culleton. Hers was entitled, How Do I Pick Out Which Earnings Call to Follow? So I've got the summary over here on the side as well. And then out of Australia, we've got Robert and Russell Markham. Theirs was entitled The Best Performing Gold Stocks. So in all of these, helping you in Susan's case, use VectorVest to find earnings calls that, of stocks that you're in or stocks you're interested in. And for Robert and Russell Markham, they're using VectorVest to find the best gold stocks in the ASX in Australia, because gold had been on a run, not just for them, but for all of us. All right, so that's all of the essays. So as I said, hopefully everybody gets a chance to go in and read those. Now, I've got the Canadian one here by Stan Heller. And just as I mentioned, we were running a portfolio competition in the Canadian software. Anybody was able to join and take part in this competition. They just had to use the Canadian software to do it. So we have first place winner is Doug C. From Ontario in Canada. Not sure if Doug is with us on the forum here, but he was competitor 050. And this is what I wanted to say, and Stan points this out in his essay. Here he mentions how October is typically a tricky month. And what this competition, one of the things this competition has shown is how VectorVest subscribers are able to use VectorVest and still manage very good gains in a very tough month. So the first place winner, Doug C. from Ontario, was able to get a 11.75% gain. And as you can see, from October 2nd to October 31st. All right, second place went to Patrick G. from Alberta, competitor 027. They were able to achieve a 9.85% gain. Third place, I don't know, maybe it stands got some doing here, but third place also came from Alberta, Chris D, competitor 063, Stan's influence maybe. Chris was able to achieve a 9.81% gain. So all of these in the month of October, folks, all of these in very tough market conditions. As mentioned here, we did have geopolitical events going on as well. Some fairly significant ones in October. All right, and here is basically the top 15. So you can see from the leader at 11.75% down to the 15th place at 3.05% gained. And you can see the percent winners that these competitors were able to achieve throughout the competition here. All right, so that wraps up that part. Yeah, and I see in the chat that some folks are sending out congratulations to the competitors. And of course, this competition, there really is no loser. Everybody learns something through these competitions. Everybody can learn something not only from their own trading during the competition, but you're able to see what other people were doing. And I'll be covering a bit more about this in the Q&A on Tuesday of this week. All right, yeah, and Tom says awesome in there as well. All right, so that's the competition. So the next thing I'm going to get into is cherry picking sectors and industries. So I'll be bringing the software up for this one. So let me just do that. And I'll start in the Canadian software here. We'll only have so much time on this one, but we'll say, whatever we do in any of the software will be easily repeatable in any of the countries. So I'll start with the Canadian software first, and then I'll go into the American software, and that'll probably be about as much time as I have. I want to make sure I give Jim all the time he needs to cover his topic. I have seen some comments in the chat about what what GICs in Canada are paying, and kind of funny in this upside down world. It's the shorter term are paying the higher return. So 1 year GICs, I see Ralph is saying he's found some at 5.7%. And as you go out in time, typically we would get more return going out in time, but these days the returns diminish as you go out in time. All right, so here I'm looking at the homepage of the Canadian software, and as we've talked about, we maybe I should preface with that. I'll bring up the market timing graph in Canada. All right, I've already put a few lines on here just to kind of show the situation that we're in at this time. So here now, at least we can visually see that, and most of our markets are the same, although there are slight differences. So we did hit a high around the 31st of July in most countries, and you could see we started a downtrend, but that downtrend was not as sharp as what we see here, what we saw come in the September timeframe. All right, so we started a lot sharper downtrend there. Here you can see in Canada, we've actually had 5 up days, and you can see some of the size of these candles. They've started to build. We have broken through this trend line, so that's good to see. However, you can see we've got this other trend line for the downtrend that initially started that we would still be coming up to. I'll put support and resistance on here very quickly. So you can see we are still in this zone of 25.45 right now. You can see from the shaded area there, it looks like we've broken through. We are through the line, but we're still in that zone. All right, so if our market continues to climb, our next level of resistance is at 26.07. And then if we can break through that, 26.33. If we have the unfortunate turn of events where the market turns back over, we have support sitting here at 24.92. All right, and you can see how our indicators are starting to get off the mat, especially that BSR. You can see how the BSR has stayed flat. All right, so I won't spend any more time on that. We covered all that back in the slides. All right, but just wanted to give the visual here of where we're at right now. All right, so typically, as everybody knows, we have a lot of different places we can look. When we're building our watch lists as the market is falling and we're waiting for whatever market timing signal we're using for our trading plan or a specific account. All right, and as we've seen in all of our countries, we do have a primary wave up. So the most aggressive traders, the most aggressive VectorVest subscribers may have already started legging into the market when they saw that primary wave move up. Now in Canada and the US, we also have the DEW up. So, you know, the next classification of investors or traders that are using the DEW are now, since it just came up on Friday, looking for follow through on Monday and possibly looking to start deploying and making trades off the watch list that they've made. All right, so we have many places to look. We have our top VST stocks. We've got our Midas Touch stocks. We've got top RT sectors and industries right on the home page as well. But what I'm going to do for this discussion is I'm going to go into the viewers. Now, anybody who's watched a lot of Stan over the years, Stan loves to go through the sector and industry viewer, and he'll state that he does it on a weekly basis. Okay, so I'm not sure how many others have developed the same habit, but it is an excellent place to go and look to see what's going on, which sectors and industries are leading the way, and whether we can find any stock trading candidates from that. So what we'll do, and there have been some strategy of the weeks the last little while on top-down investing. So we're going to start in the sector viewer here. All right, so we can see the top 5 in Canada: steel, insurance, container, ETFs, and retail. Now, one of the things we can do is we can always take a quick look at the sector graph. All right, and I do have the NPI layout on here, so you can see steel is moving up. We have got a crossover from the RT perspective. You can see price moving up here. Let me take the crosshair cursor off. And you can see we are looking at getting 5 crossing over the 40 from a stop perspective here as well. All right, earnings aren't looking great for the sector. And you can see their RT ranking along the bottom here. All right, so that's one of the areas we can look and we can do some analysis. I'm not going to do a lot of that here. What we're going to do is we're going to double click on steel. Now, one of the things to keep note of is, and one of the reasons why I will go into the US software right after Canada, is Canada, along with a lot of the other non-US countries, we don't have the breadth. We're very sector focused, but we don't have the breadth of the US market. So here you can see for the steel sector in Canada, we really only have one industry, and it's steel basic alloy. All right, and overall, we can see how that industry is looking. Now, if I right click on industry here, we're going to take a look. We'll select view stocks in the industry group. And again, in Canada, we only have 3 to choose from. Now I'll leave this window at the size that it's at, and we'll just take a look here at our 3. So we've got DRX, we've got Algoma, ASTL, and we've got Stelco, STLC. If we just look at these three stocks in this window right now and just do a quick VectorVest analysis of these stocks, you can see that, VST wise, and that's how they're sorted here. ADF is far out in front of the other ones. Algoma has crossed over one just recently. Stelco is still below one. We've been talking about the CI, the Comfort Index indicator, the last number of weeks as well. And look at the CI of DRX as opposed to Algoma and Stelco. So here you can see from a capital, an increase in capital potential, ADF way out in front from an RV perspective. And the group as a whole, their RS, their safety is below one, but ADF is at 0.99, so the closest to one here. And of course, you can see they're all in uptrend, but DRX is the leader in uptrend as well. So just looking at these stocks, or just looking at these stocks in this list, we could already see how we might not want to look at all of them. We will just very quickly here to see whether we have any candidates now that the market is turning up that we might be interested in. So here's the graph of DRX. So if I can get in the chat, how many looking at this graph think we might have a candidate in DRX? Give me a 1 or a yes in the chat. Let me get my crosshair cursor off here. All right, so we do have a delay. So I'm seeing the ones. So I'm seeing ones, no twos for a no. So you can see we do have price moving exactly the way we want it to, bottom left, upper right. Their earnings per share was fairly flat for most of the year, but did start coming up, and now of late is increasing fairly good. You can see we did get a crossover from an RT perspective. The 5 did cross the 40 a few days ago. And from a stop perspective, that crossover happened quite a while ago. It is maintained, the 5 is maintained over the 40 for a better part of half a year here. All right, and if we take a quick look at our others, give me a 1 for anybody interested in ASTL, 2 if you're not. Just on a quick look there. And so I see Centillo is asking if you can buy DRX in the US. So only if that's an interlisted stock, and I'm not aware of whether DRX is on the US. So most people are saying no to ASTL. Just going back to DRX and then ASTL, and I'll do the same here for Stelco, because I'm pretty sure anybody who has given me a 2 for Algoma is going to give me a 2 for Stelco as well. Even though, so again, look at earnings going the wrong way. We did get the cross, so traders, more than investors, may be looking at a stock like Stelco and jumping in when we get the crossover from an RT perspective. You can see there we're still waiting to see whether we get that crossover from a stop perspective. All right, so would it be safe to say that we have a possible candidate very quickly here in DRX, looking at our top industry in Canada? All right, and if we do the same thing here for insurance, first thing I'll do is I'll view the industries in the business sector. And in Canada, again, you can see that we only have two. The leader with ranking right here, the RT ranking of 7, is insurance property casualty. So let's do the same thing here. I'll bring up a graph. Whoop, sorry, don't want to do that. Let's look at we want to look at the stocks in that industry group. All right. And coincidence, we only have 3 in this one too. So we've got Fairfax. I think every Canadian knows this stock pretty well, FFH. We've got Definity Financial, and we've got Intact Financial Corp. So let's graph these. And we'll do the same thing. So I've got Fairfax Financial graph up. If I can already see ones for those that are interested in Fairfax Financial with this market upturn, and a 2 for anybody who isn't. Here you can see price, bottom left to upper right. You can see their earnings doing the same thing. If we look at the NPI setup here, you can see we haven't got the crossover. We've got the turn from a 5 perspective. So that 5 moving average has crossed over and is moving up. All right. And from the stop perspective, the 5 has maintained above the 40 for the whole year. So we've got ones all over the place across the board there. How about, I'm just going to go quickly here. So Intact and Definity Financial, you can see quite a different story. And we did also see quite a different story with them when we were looking at it just in the spreadsheet view here. Fairfax Financial, a comfort index of 1.74, 0.66, 0.66 for the other two. All right. And you can see all of, from a standpoint of analyzing Fairfax, you can see all of the indicators very strong on that one. All right, I look like I'm running kind of long here, so I'm going to jump over to the US side. And I'm going to hit the US side, and we're going to do the same thing very quickly here. So I'm going to go to viewers. I'm going to go to the sector viewer. Now you'll notice the top 5 for the US, we've got office, insurance, utility, steel, and ETFs. You notice we have some repeats from the Canadian side. Insurance and steel were both in the top 5 on the US side, or sorry, on the Canadian side. All right, so if I double click on office supplies is the top industry. If we take a quick look here, we'll view stocks in that industry group. So here we've got our list. Let's just graph all of these quickly. All right, so Brady Corp, office supplies. I'm going to put earnings on here because most likely we're looking at an earnings gap up. And let's just take a quick spin through these. Here you can see the graph on Brady. Let me get that crosshair pointer off. You can see the setup. You can see their earnings. So if we go through EBF, ODP, Avery, ACU. Would everybody agree out of this group that it looks like Brady, who might be looking to set up, we don't have a setup from an NPI perspective, but give me a 1 for everybody who thinks that Brady might have been the better looking one out of those 5. And if anybody thinks another one was, they could put the ticker in. But here you can see they did have a gap up in earnings. They did pull back with the rest of the market. now you can see, and they basically pulled right back into this area here, this zone here. They did fill the gap. So on the US side, this definitely might be one that you might want to keep your eye on as you watch the 5-period moving average RT curl back around and see if we can get crossover of the 40. You can see the 5-period moving average of stop has also curled around and started to move back up towards the 40 there. All right. Yeah, and looks like folks are noticing some things. So we've got some who don't like all of them, and that could definitely be the case for sure. Stuart saying this one's bouncing off support, which we've talked about there. Yeah, so there's none of them. It wasn't a great list. Let's take a look at, I'll minimize that. So let's take a look at our second. And this was the same sector that showed up in Canada. Here it's life, I believe it was property casualty, which was the top in Canada. So if I double click this one, let's just take a look at, if we take a look quickly here and we'll concentrate on CI for now because we've been talking about it the last little while. I'll leave it at VST, but we'll take the top two that have the highest VST. They're tied. That's F&G and Primerica, both buy rated. Both buy rated, both CIs well over 1. Let's graph those. All right, so who out there likes the looks of F&G for a candidate out of the US side and in the insurance sector? Give me a 1 if you like the looks of this graph. Here, if we take a look, I need to get that crosshair cursor off. We only have data back until from December of last year. Looks like I'm seeing quite a few 1s. You can see from an NPI perspective, well, if we look at price, bottom left, upper right, earnings, bottom left, upper right, from an NPI perspective, we've just recently got the cross. From an RT perspective, we did get a cross from a stop perspective way back here in May, it looks like. All right, and if I take a look at Primerica, I would guess that folks that were interested in F&G also might be interested in Primerica. One of the things noticed on F&G here, and I'm going to scroll us so we're looking at the entire screen. Now, in the middle of September, we had the Toronto seminar, and Stan was presenting an MPI presentation during that Toronto seminar. So one of the things that Ray happened to bring up during Stan's presentation, he shared with everybody in the group conversations that he had had earlier in the summer with both Dr. D and Dr. David Paul on the MPI, and they were all in agreement. I'm going to put a date line on here, and I'm going to go back in F&G right back to this point here. You can see where we got, this would be where we got the cross, the RT cross of the 5 over the 40. And so what they discussed was, and also you can see we don't have the crossover from a stop perspective. So that's key here. So we've got the cross from an RT perspective, but not the stop perspective. And let's say you're looking to, your full position would be $5,000. So what they discussed and all agreed on was when you get the cross of the 5 over the 40, that might be the point you might want to leg in. And in this case, you would leg in with half, $2,500, and then watch that trade closely to see if it plays out in your favor. And as you can see, if we were back in this time frame here, it did. And then you can see we eventually got the crossover from a stop perspective. And at that point, you would add your other $2,500 to make it a full position. Now, if we play this one forward, so now you have your full position going forward, you can see that your MPI setup continued. Everything was in good shape right through this area until we get right into this area right here. Now here you have a choice, and basically what was stated, so you can see from an RT perspective, we're looking at a crossover back down, so the 5 crossing below the 40. So at this point you could exit with your first half of your position, take your gain, but because we're still in good shape on a stop perspective, you could continue to let the other half ride. Folks that listen to Dr. David Paul a lot know he talked about this a lot, letting your runners or your winners run, and taking half off the table and letting the other half ride. Okay. Now we could go further with this, and I think I will in the future. But I know I'm running into to Jim's time here, so hopefully I'll just ask in the chat. So if everybody can let me know if they think that would be a good strategy, something that they could use. I know a lot of people find the MPI one of the best setups to trade with. So if you can give me a 1 in the chat, if you think that this is a good strategy and something that you could use and might work out for you and help you basically carry out trades tactically in a lot better way. You can see how that kept you in that position, and eventually you can also see how you did get other opportunities if you did stay in that position to come back in with the other half again. All right, so I'm seeing a lot of 1s there. Great. Hopefully everybody saw something possibly new. I know if you were already in Toronto or possibly in LA or Atlanta, this might have been discussed there as well. But for anybody who hasn't seen it, hopefully we found you another way to use the MPI and continue to stay in trades, at times where you might not have stayed in. You might have exited out of your entire position here. Sure, yeah, you would have got a gain, and we never we never looked badly on gains, but with this strategy here, you would have exited out of half of your position. The other thing that you could possibly do is when you get this crossover, and I'll just hit on this point fairly quickly here. When you do get this crossover, and I would say this would be more along the lines when you're entering the position. So let's look at a false entry here. So if we go to this location here, and let's say we're not in this position anymore, we're looking to do the same thing we did back in May. All right, you can see we got the crossover of the RT, the 5 crossing the 40 here. But you can also see that was short-lived. Of course, you don't know this at the time. You don't know what's going to happen tomorrow, but we can see now in hindsight that was short-lived. Now, one strategy to use here is if we followed the rules to a T, we would say, well, it crossed over, I'm exiting the position. But what Dr. Paul likes to do is he likes to look for a level. So I'm going to put the date line back on here again. But can't have them both. So we're going to stick with our horizontal line. So you can see we enter in the position here, and right away it pulls back. How many times, folks, do trades you enter pull back as soon as you enter them? And what Dr. Paul suggests doing, and here you can see we can very easily pick this level here, these old tops. Dr. Paul loved old tops. So this zone, and we could say, as long as we don't pull below this level here, we won't exit the position. We'll stay in it, and we'll see if we can bounce off this level. And here you can see intraday, if I zoom in a little closer, intraday, yes, we went below this level, but we didn't close below it. So you would have stayed in that position, and you can see what's happened to that trade since. All right, so that was the last thing. I wanted to spend more time on that, but I am running too far into Jim's time. So hopefully everybody saw something of value there, and maybe saw a few things that they'll be able to apply to their own trading. For now, let me go back to my slide deck. And here's where I'll bring in Mr. Jim Penna, Manager of Retirement Services. He's going to go over how to outperform fixed income investments. All right, so Jim, if you want to hit share on your screen now, you could take it away from me.
Okay, thank you so much, Rick, and thank you to everyone. I want to make sure you guys can hear me okay. Make sure my my microphone is on, right? You guys can hear me? Now, there's a delay. I want to be sure before I start ranting on here. Hello, everyone. All right, very good. Okay, I just wanted to be sure. All right, listen, I'm going to talk about how to outperform fixed income investments. First of all, again, thank you for being here. For those who don't know me, my name is Jim Penna, Manager of Retirement Services. I've been here at VectorVest for about 16 years now. Yeah, see, I have my world's #1 policeman mug here. John said, "Welcome, Officer Penna." It's good to be here. I'm going to talk about an essay that Miss Angie Akers wrote a couple of weeks ago. The last few essays have been so important, so critical to what's been going on in the market. And I decided yesterday to do the special presentation on that one. So you may have watched it. And if you did, that's okay. I'm going to go over a lot of the same things. But the great thing is on a live, the live presentation, if you have questions, I'm going to do my best to look at the chat box, but I want to get through, so we'll open it up to a Q&A. We should have plenty of time to get to 12:30 and answer any and all questions, because it's pretty straightforward. That's the beauty of a lot of what's been talked about. Comfort index a couple of weeks ago, last night the market climate graph. So I want to just jump in here and talk about this. So let's start here. The goals, as I do each time I do the special presentation, and I said this last night. Again, if you watch this, you're going to hear some of the same thing. Vicky says a good point bears repetition. I do believe that. I believe that. Anyway, I usually will. There's an old saying, when you're giving a presentation, you tell everybody what you're going to tell them, you tell them, and then you tell them what you told them. So I try to lay out the goals of the presentation. Obviously, the goal for every presentation that anyone here at VectorVest does is to make you a better investor. right? We try to make you a better investor by using the VectorVest program and all of the power behind it. Last night, and in this presentation, my goal is to answer this, again, very critical question in this market condition. Now, I know we've had this wonderful rally this week. I think it was the biggest week of the year, a big move to the upside. Why? Because the markets, they think that interest rate hikes are done, and they think that maybe they'll get cut soon. Okay, that's up to you. It's wonderful to see it move up. Our DEW went up, but there's still a lot of macro headwinds, and I'm going to go into the market climate graph to talk a little bit about that. Angie, again, did a great job last night talking about the market climate graph, which I think outside of the market timing graph is the most important graph that we have in the program. But Angie posed this critical question: as investors during these periods, these difficult periods, we have to ask ourselves if it's possible to make more money in the stock market without accepting a heavier degree of risk. And this is as opposed to, whether it's AAA corporate bonds or T-bills, T-notes, the ETFs that track them, as I talked about. That's what we're comparing it to. And I had one important note to make, and the point of this presentation, the point of what I'm trying to get across here is not to say that allocating a portion of your assets to T-bills, T-notes, safer investments, whatever it might be, safer vehicles. I'm not saying it's wrong or ill-advised in any sense, okay? Especially if you're more of a prudent, conservative, retirement-minded place in your investment, then you should be allocating assets to cash, to some of these other safe investments, okay? So I don't want that takeaway to be that that's what I'm saying. I took the first paragraph of Dr. D's Stock Strategy and Common Sense. It's called The Golden Touch. And he talked about, and paraphrase a little bit here, I strongly urge you to go and read that. Beyond the need for current income, he talked about the minimum rate of return you should aim to achieve is equal to the sum of the inflation rate plus the current yield on bonds. And I used the inflation currently at 3.7. I used the bonds, and I did what Angie did in her essay. I took the average of T-bills, T-notes, and AAA corporate bonds. Dr. D talked about simply AAA corporate bonds, but I just stayed along with what Angie did and just kind of used the average of those. So that's why I put that little footnote there. Okay, so what we're talking about is, yes, if you're afraid of the market, if you're uncertain in the market, and you simply go to these returns that are going to get you 5% a year, that's wonderful for a portion of your assets. Okay, but again, Angie's question was, can we do better without assuming the type of risk that's just generally thought of in the market? Okay, so I'm going to answer that question. I answered it in the presentation last night, I think, and I'm going to answer it again here. So what I'm going to do is, well, first of all, I'm going to get rid of these things. What I want to do is go into the program and talk a little bit about what Angie was showing. The first thing I want to do is bring up the market climate graph, okay, because some of the numbers from last night, they've changed slightly. The market climate graph, as I said, I believe is, aside from the market timing graph, the most important graph we can look at. And Angie worded it perfectly last night, right? We look at the market climate graph as this macro view of what the markets, not just the markets, but what the economy is doing, right? Dr. D always talked about the three important factors that move the market, that is earnings, interest, and inflation. And that's what the market climate graph is here to do. I set mine to roughly a 2-year look back to give me an idea of what's going on. And for those who are in the coaching group or have heard me talk about the market climate graph before, there's certain things that I'm looking for before I feel a lot more comfortable, even with this rally that we've seen. Up top is the earnings trend indicator, right? It tracks the 50-day moving average of earnings per share in the S&P 500, based on the VectorVest analysis of earnings per share. On that 0 to 2 scale, it's above 1. And anytime the earnings trend indicator is above 1, we know that we are in a bull market scenario. Okay, a bull market scenario is when earnings are rising of the 8 scenarios. Angie mentioned that this is the more strategic look, right? The market climate graph is not a market timing system per se. It's a strategical look at the macro view of what's going on. Down below, I've got CPI, CRB. So we've got inflation, we have commodities. I put T-bills, T-notes, and the AAA corporate bonds. Not, of course, we know the Fed funds rate is at what, 5.25 to 5.5, whatever. I believe that's what it is. Okay. So what I've been saying, I'll believe in these rallies, and this part of this, is using the market climate graph. But what I would have you at least consider is, yes, we saw the T-notes turn over a little bit. The T-bills are still up over 5. AAA corporate bonds are still very high. And the Fed chair himself has continued to say that they're not close to their CPI number or their PCE number, and expect interest rates to remain higher for longer. There's a big difference between a pause and a pivot, right? They're pausing these interest rate hikes, but I don't know that I count on any cuts anytime soon. That's for your consideration. What do I base that on? Well, I look at the rest of the information down here. When I see the trajectory of these graphs down here continue, like what T-notes did here, bonds, okay, then I'll start to feel a little more confident as earnings continue to rise. But I think that's an important part of what we look at. Angie talked about it last night, and I think it's an important part when we talk about how we can invest in the market and differentiate, again, between that macro view and what the market timing indicators are telling us, okay? So I do believe that that's important to look at. Let's go to Angie's views from October 20th. Again, I just thought it was the last, well, they all are, but the last few have been very important to what's going on. And I won't read through the entire essay here, but Angie talked about the bonds, and she used the average of what the current returns are, and that they're risk-free, and a 5% annual return is pretty good. But using Dr. D's equation of CPI and interest rates, you're still losing money, right? We always say you don't just stack your cash under your mattress, because you're losing money to inflation, especially where it is now, along with interest rates. So the goal is, per Dr. D's chapter 5 comment, there is to outdo what he called that hurdle number, okay, of 5 of the combination of inflation and interest rates. So Angie took it to the trading system viewer. She set some really good basic foundation. Annualized rate of return, she wanted the trading system to beat that average return of bonds mentioned above, that the risk had to be categorized as prudent or conservative, and the drawdown had to be less than 10%, with just any positive gain on that trading system over the last year. Okay, so some pretty basic ideas. She went into the trading system viewer and showed how to do it. So what I did was go in, and I want to take a few minutes to show you how to do that as well. So where I'm going to go here is into the Viewers tab, and we'll have the menu broken down. You can go to the Trading System Viewer. That's going to bring you into, I don't even know how many trading systems are listed here. There's a decent amount here, and they're all they're categorized as either aggressive, prudent, or conservative. Right, and you'll see a lot of different numbers here. Some combine buying and shorting stocks in the downtrends. The more conservative, and certainly the conservative ones don't short. Some of the prudent ones do. So what Angie did in her essay was simply say, okay, I'm going to go to the drawdown. I'm going to look at a 1-year drawdown of these searches. Again, remember the point of all this. It is not as a day trader or a swing trader or somebody trying to double the value of their portfolio in the next 60 days. Okay. It is not what we're talking about here. It's talking about making money in the markets using the VectorVest program to outdo that hurdle number without taking on any severe risk, remaining risk averse in the way that you do it. Again, the whole point of this is to show you how to do it using the VectorVest program. Okay, 1 year drawdown. So we take a look at those. Right now, as of yesterday's close, there are 5 searches that show less than a 10% drawdown over the last year. Okay. Now, I would argue that, maybe anything with a 10 handle might also be pretty good. Ruler Stock's Prudence pretty good, even though it does show negative for the last year. Blue chip dividend payers, that doesn't include the dividends. For anyone in the coaching group knows those are my two my two go-to searches and strategies. But we see right on the top VST newbies, we see S&P 500 winners, that 5015 is the Profit Locker Pro. No, I'm sorry, not Profit Locker Pro, just the Profit Locker stop. We do have one that is more aggressive, so we're not going to use that one. And then there's Midas Touch RT descending. Okay, so these are the ones that kind of fit in to what we're looking for. Again, this idea is that we can make money in the markets as long as we heed the color guard, which was last night's essay, right? Know when to buy, what to buy, when to sell. That's all that this trading system viewer, well, that's all it does. Tells you when to buy, what to buy, when to sell, and shows you how to be profitable. Angie talked about going into the search tab here and typing in, you can type in conservative. It brought back, I believe at the time she wrote the essay, one search, I believe it was Moneymakers, right? It had a positive return, less than 10%, annualized rate of return, greater than not only those bonds, but the hurdle rate that we talked about. So that's a good one, uses the green light buyer. You can also type in, and again, because I only have a certain amount of time, I've chosen to type in prudent here. Whoops, didn't pick. You can type in prudent in the search box and it'll bring back just the trading systems that are categorized as prudent. Top VST newbies leads the way. Again, the S&P winners. The all-time highs are based on the length of this particular model portfolio. So S&P winners goes all the way back, I think, to 2012. That's why you see that return there. Okay, but these are the 3 searches that came back. Okay, Midas Touch and top VST newbies. These are the ones that I'm going to focus on. Okay. Okay. I know there's a delay. I'm peeking at the chat box. I'll answer any questions you guys have afterwards. I just want to make the points here that I'm trying to make. So top VST newbies, what did I do next? Well, this is great information. And this is where Angie, said, listen, just with one click going into the trade system viewer and 1 or 2 clicks once you're in there shows me searches that have these very strong annualized rate of returns over time that have been positive over the last year. Certainly the last week has helped that, but they were already positive going into this week with a very acceptable drawdown where you can make money, again, to exceed that hurdle rate. So I decided, all right, let's take it to the next step. And I went into the back testing tool. Now, what I want to be clear here is there's a lot of folks who back test, and there's a lot of ways to do it. Picking specific dates, having that sliding window, different time frames, and you can do that. Back testing is an integral part of creating a trading system or an investment plan, right? You simply take trades that would have occurred in the past based on a very specific set of rules, right? And see how they performed over time. You take those results and you're able to, gauge the effectiveness of that strategy, right? Makes sense. If the search has worked well, it's likely There's no guarantee, but it's likely to work well into the future. And if not, if it performed poorly, then it's likely to perform poorly moving forward. No guarantees either way. What it does is build the confidence, right? Again, there's no guarantees, but it builds the confidence that you need in the investment plan that suits your investment profile. Okay, so that's back testing. What did I do? I simply went back. I did this just a couple of days ago. I went back 1 year. It doesn't matter that I didn't update yesterday's, because none of them would have, they would have stayed the same, because we just got the DEW up after the close yesterday. So yesterday's activity wouldn't have done it. In fact, the last week's activity didn't do anything to raise these. So I went back. Let me start with, I want to start with the top VST newbies. I'm going to start here. I simply went back 5 years from a couple of days ago. I ran the search. I employed the trading system. Again, from the trading system viewer, all I have to do is I could set up a portfolio by simply saying paper trading portfolios, or I could back test by hitting new and simply selecting an existing trading system, and then finding and you can sort easily, by the way, by category here as well. So there's top VST newbies. Okay, and I select it and I can create the back test that I'm looking to do. So I just wanted a quick navigational way to show you how to do that. So what I did was I ran them for a year. These are the results. Fully automated on a back test. We've got over 114% return, just under 23% annualized. And the key is the drawdown, right? For the 1 year, it was only at 5.4, but 11% drawdown over the last 5 years, right? That cuts into a lot of different market environments that we've seen. Okay, so this is what we're talking about when we use the program properly, when we know what to buy, and when to sell, how you can use it without, listen, there's always risk. I'm not naive. I've been doing this a long time. Okay. But the idea is to use the plan that fits what your goals and objectives are. And if you think 11% drawdown over the last 5 year span that we've seen is too much, then maybe you should give me a call, because we might need to talk. Also, the average annualized rate of return is very strong here as well, up over 22% for the last 5 years and staying very strong all the way through there as well. For those who think that the annualized rate of return of only 18, 19, or 22% is a little too conservative or prudent for you, also give me a call, because I disagree. So I think, and as I noted in my presentation last night, I know a lot of traders, hedge fund managers, and others who would do a lot of things to average 19 or 20% annualized rate of return. Okay. So I just wanted to show that. I wanted to just take it a step further from Angie's essay that she had walked through, the ability to do that. I did it also with Midas Touch RT descending. This is also a prudent search that uses the DEW versus the GLB RT kicker timing system here. We didn't get our green light, although we did get the DEW up. So for those in our retirement coaching group, and I know Terry is getting ready to start hers. Of course, we want to wait for follow through on Monday, right? To me, that's key. We got to wait for the follow through come Monday morning, even though the DEW is up. If you have a portfolio automated to set, it's going to buy them at 9:31 Monday morning, regardless of what the market's doing, right? Obviously, in the real world, if the market opens down for whatever reason, we're going to hold off, right? We're not going to go in and buy that. Okay. So just kind of a side note, right? We still need to follow through. Now, in the Midas Touch RT descending, again, in our coaching group, we're gonna implement this, and I think I'm gonna implement the top 20 newbies as well. We didn't get the green light because we had a red light 5 trading days ago. So the market could have gone up 5,000 points. We couldn't get a green light because of the rules of the color guard telling us you can't go from red to green or green to red if that were the situation. So that's what we're looking at. That's what we're going to implement in our coaching group. And for the Midas touch, okay, and Terry, and anyone else in the coaching group, this is the trading system used in the trading system viewer. We're going to tweak that in our coaching group, and Terry was kind enough to create some back tests and just give a minor tweak to that trading system. So I thought it was a great thing. So we're going to use it a little different. We're going to use only 5 stocks instead of 10 stocks. And what I wanted to show you also is the ability to go to trading system details here. And if you're not familiar with top VST newbies, you just click on the information there. It'll give you all of the historical information that you need here and that you want to analyze that. Go to the trading system rules, right? We're buying long from this search, the top 20 newbies. I'll show the search parameters in a moment. The stop criteria, you buy it only when it's a buy. We're going to sell it when it becomes not a buy. Stock becomes a hold or a sell, obviously we're going to be out. We're going to maintain 10 positions. We're going to tweak that to 5 in the coaching group. Then we have looking at only, we've added 2 stocks per industry. Okay. Well, for 10 stocks, it's actually 3 stocks per industry. For 5 stock, it's going to be changed down to 2. We're going to go to cash when the confirm for GLB RT kicker. When the confirm down call comes, we go to cash, and then no action during the neutral session. So that's really all it is. And, at first glance, it seems like more of an aggressive way to trade. But I say, what's more prudent or conservative to say, okay, when the VectorVest program tells you that it's time to, that trend has gone down, to go to cash, right? I think that's a fairly prudent, conservative way to go. Yeah, Jake typed in, there's only 3 stocks in the top 20 newbies. Yeah. That's right. And that's what we would purchase. We would purchase the stocks that are in there when the market timing system goes to up. And we would continue to fill in those positions as we go. There's nothing wrong with stepping into the market, right? That's why I love, just a comment real quick, and Rick was showing the NPI and this idea. I got to go to Atlanta. We'll be coming to Dallas, I think, soon. And the talk, Steve Chappell gave the talk in Atlanta and talked about that idea of entering positions incrementally. I think that's a great idea. Okay, so when you get that NPI crossover, you enter in, you get, if and when you get that the stop crossover, you build a full position. The NPI is more likely to cross back into negative territory. You take your profits off the table, and that's a wonderful trading system in and of itself. The idea of incrementally growing and then taking your profits off in that same position, growing and trimming it down, I think is a wonderful idea. But that's what we're going to look at. I want to just quickly go into the Unisearch tool, and we'll take a look. Top VST newbies is in the prudent folder. Scroll down. I know I'm going a little fast here. I realize that as I'm talking, but I don't want to go too far over our time, and I want to make sure I handle some of the questions that come in. So top VST newbies, right? It's got to be at least $5. The VST has to be greater than 1.4. A week ago, the stock was not in the top 20. Now it is. Okay, at the time of search, and then just the basic indicators here. So as Jake said, yes, right now there are only 3 in there. This market continues to rise. My guess is that will change. There'll be sector, industry rotation. Different stocks will begin to move to the top of that list, and that's what we'll see. Okay, but just to go back to the back tester and talk about the top newbies here. This, again, remember the whole reason for me ranting about this is the ability to have that drawdown. Now, a little bit more drawdown in the Midas touch, but right, to get something in life, you got to give something up. So there is a little more drawdown, but you're looking at returns that are over time much greater. Now this year, right, the last year, this specific search has not worked as well. We had a point in the middle of the year this year where the DEW kind of whipsawed a few times. But over time, these numbers become pretty amazing. And if I click on, just to give you an idea, so we look here and you can see, that it was underwater a little bit through 2019, but you get that, kind of that, what we used to call the golden staircase feeling here, right? This is using the 10 stocks, by the way. When you use this using only 5 stocks, 2 per industry, these numbers really go through the roof here. Okay, so no reason you can't allocate an amount to each of them. Okay. And then the top newbies here. Also, again, that golden staircase idea of what we see here. The point of it all was to answer Angie's question, right? And I said in the presentation last night, the answer is yes. You can make money in the stock market in difficult periods like we see now, regardless of this sort of rally that we've had. Anybody ever hear of short squeeze and FOMO? I'm not saying the market's going to go down. I'm not saying it can't keep going up, but you have to understand it's there's a lot more behind these rallies than I believe the average individual investor saying that, everything's fine now. Right? Even Goldman Sachs had put out something about how badly they had gotten hurt on the short squeeze. Okay. Okay, I'm just kind of seeing if there's any comments or questions there. So that's what that was the point of what I was trying to do. I was trying to just kind of take Angie's great essay, take it a little deeper, look at how you can do it, just some of the results of doing this. Again, there are searches in there where you short stocks on the downtrend that are a little more aggressive, that may show greater annualized or compounded rates of return. My guess is they're also probably going to show some more drawdown. But this is aimed at the current market condition. Okay, so we'll see how that goes. All right, I'm trying to think if I hit. Greg is asking how to access her essay. Simply go to the Views tab. Thank you, Greg, for asking that question. Again, I know we're on a delay here. Go to the Views tab, and then you'll see the calendar here, and you simply can go back to at any point. Just all I did was click on October 20th, which is where the essay was. So you can get any daily update, any weekly update, simply going into the calendar here. Yeah, Terry, right. Yeah, nothing makes for a great rally like a short squeeze. And again, I'm not, I'm giving you things to consider. I've been trading for a long time. Right? I know things are different from when I worked on a trading desk. We used to actually have pieces of paper that you wrote your buy and sell orders on. That's how long I've been doing it. But the algorithms, the trading, the way it's done now, the ETFs, the trading that goes on there, the short squeeze, there's a lot going on. There's a lot going on. Lauren says, what do we need to get the RT kicker up compared to right now? Great question. Let's go into a market timing graph real quick. And I'm going to go to a weekly, I'm sorry, end of day. I'll put a 6-month graph on, and let's make it an RT kicker graph. So what do we need? We need a green light in the price column, which if the market goes up on Monday, I'm sure we'll get one, right? And then what we also need down below is that green light to be confirmed by the 10-day moving average being above the 15-day moving average of relative timing. Okay. So that's when we'll get the, go ahead and put that on there. Right. So we got the confirm down on August 9th. That's where we've been ever since. It's going to be interesting where this moves from here. As Rick noted, we did break through that trend. We still have to see what happens here. It's going to be very interesting. And again, I'm looking at this. Just to wrap this up, because I'm at my 12:30 mark here. I will answer any questions I see come in, but my final point is, I want to see the follow through. I look at this as what your initial goal should be, managing your portfolio, regardless of what your risk reward profile is, whether you're day trading for nickels and dimes or you're retirement investing, right? Rule number one, as Warren Buffett said, don't lose money. Protect your portfolio. You have to protect your portfolio because, as Ray Dalio said, what good is making the money if you don't know how to protect it once you make it, right? An unrealized gain is not a gain. Okay, you have to keep that in mind, right? An unrealized gain is not really a gain in your portfolio. Just something to leave you with. All right, let's see if there's a couple of questions I can answer. I know I don't want to run over too far here. Let's see. So that could happen Monday. Lawrence said, so that could happen Monday. So if it happens Monday, would you wait until confirmed on Tuesday? Lawrence, yes, I would wait for, right? Because listen, you can do it intraday and you could step in to the shallow end of the pool. You can add a position or two if you choose to, but it's a great question. I like to wait, like during intraday yesterday, you would see that the DEW technically was in an up situation, but it's not confirmed until the close, right? The DEW isn't up until the market closes where it needs to be. I would wait for the follow through personally. I would wait for the follow through. JR says, I ran that newbie and only got a return of 16%. I don't know what you ran or what time frame you ran it, JR, so I'm not sure. Terry has a great question. Do you look at the follow through on a daily basis or just until, say, midday of the potential first trading day? So great question, Terry. I look for it as, and there's really two ways you can do it, but I look just for that opening. Remember, Dr. D always used to say that 9:30 to 10 o'clock, right? You wait till 10 o'clock, see the follow through, wait for the dust to settle. He used to call it, amateur hour, that first hour. You want to wait to see where the market's going. I always called it, the professional hour. That's where market makers and the people who know what they're doing were going to make money in that first half hour. But listen, there's nothing wrong with stepping in 2 or 3 positions each day the market continues to rise. I have no problem with that. I also have no problem. Remember that if I go back to, where am I want to go back to? I want to go back to the backtest. Remember, this is all automated. This is not waiting for follow through. This isn't waiting for, any subjectivity to it. I believe in, Terry, as you know, as I go back to March of last year, how it hurt our ruler stock portfolio that I still can't get over. was that we automatically bought stocks the morning after that March 30th, I want to say it was 29th, confirmed up call. And the market hasn't come close to that level since, and the market went straight down, and we took a drawdown. But even that portfolio is still up over 20% annualized rate of return. Michael asked, can you use the Midas Touch RT descending for selling covered calls as well? You certainly can, Michael. I haven't really looked at are they the type of stocks that will give you the liquidity for options? There are certain factors for selling covered calls against, but listen, the short answer is yes, right? Selling, I could do another whole hour long on just that. Selling covered calls as the market's coming off a bottom is not a great idea for a growth investor, right? Because you're limiting your upside potential. However, if your goal is just to generate income on some what would end up being shorter term trades as the market rose, that would be a great strategy. So I can't say is it good or bad. It depends what you're looking to do, right? Selling covered calls when the MTI is rising above 0.6 and the buy sell ratio is rising, and let's say that the move to the upside continues, I happen to think there's never a really awful, terrible time to sell covered calls, but that's probably the worst time. And as the MTI continues to rise, or unless you own a stock that you have a large unrealized gain and you want to lower the cost base, you can do that as well.
Well, Jim, what do you think?
I'm done.
All right. I think I'm going to share my screen. I thank Jim very much. I think everybody really enjoyed that. Lots of great information there. Lots going on in the chat as well. So thank you very much, Jim, for coming out.
My
there
pleasure.
were maybe I'll take care of it last time because we have run over. I just will mention the strategy that I went over. I was looking at the clock, so I realized I was running into Jim's time, so I went over a little faster than I probably should have. For those that are interested in seeing more on that, I will cover that. I'll allocate more time in the Q&A this Tuesday. So anybody who wants to see that, and I think we had a pretty good stock to go over a few different scenarios with. So I will allocate some time on Tuesday in the Q&A to go over that for all of those who are interested. All right, so if you're interested in that, join me there. For now, we will advance our slides here. And thank you, folks, again for coming out and spending part of your weekend with us. I hope you got a lot of good information here, things that you can use in your trading. And as usual, if you have any questions, don't hesitate to reach out to our product support and training folks at 1-888-658-7638. You also see the international numbers on the side, and you see the support@VectorVest.com email down below. As well, you see Ray Clark's email down below. If anybody has any ideas on anything they want to see, these presentations are done for you, VV Nation, all subscribers. So if there's anything you'd like to see, if you have ideas yourselves for a presentation or anything like that, feel free to email Ray Clark at rayc@vectorvest.com with any of those ideas. And until then, thanks again to Jim. Thanks, Joey and John, for everything they're doing to help this out, and all the rest of the VectorVest staff. There's a lot of things that go on to provide all the information and help us put these presentations together. So until the next time, folks, we will sign off for now. Thank you very much for coming out, and thank you for all the thanks. You're welcome for all the thanks, and we will sign off for now. Take care.